According to the Wall Street Journal, Amazon is set to cut 27 of its 30 clothing brands in an effort to combat rising costs and also keep FTC scrutiny down. The big retailer will jettison brands such as Goodthreads and Lark & Rowe, while they will only keep Amazon Essentials, Amazon Collection and Amazon Aware. And this is despite a strong showing in its second quarter earnings that came out last week. So how can we understand this shift in strategy, and what does it mean for the retail sector as we see more of the big box retailers release their earnings next week? Well, we're joined now by the Wall Street Journal reporter who broke that Amazon exclusive, Dana Mattioli, as well as tech business journalist and author of Winner Sells All, Amazon, Walmart, and the Ballet for Our Wallets, author Jason Del Rey, to discuss those very questions. Good to have you both on the show. So, Dana, I want to start with you here. This balance between some of this pressure ahead of perhaps some from the FTC versus really getting rid of some of the less profitable parts of Amazon's business here when it comes to retail. How much of that balance was about one versus the other?
I think it's both things at play, and there is some correlation here. The private brands business has been a small part of Amazon's business, but a source of major scrutiny from regulators. They have just been hammered by different regulators around the world about how they're using seller data to create these brands. And for a while, those brands had a leg up on different placements on Amazon.com in search that made them sell really well. Well, once that scrutiny started setting in, they stopped doing that. And a lot of their own products sat on the shelves collecting dust, making them unprofitable. So they're very much linked. But this is a business decision, but it would also probably take some scrutiny off the table as well.
And I'm curious, Jason, what your take is on what shape that scrutiny is going to take and how much of a problem it's going to be for Amazon, particularly given that they are taking steps like the one that Dana reported on.
Yeah, I think, for sure, we all expect, Dana's reported on it, other reporters, an FTC antitrust lawsuit to be filed in the next month or so. And, frankly, I don't think it had to be this way. I think Amazon was super aggressive in their use of seller data over the years, in the promotion of their in-house brands, to a point where it felt and seemed to many sellers as unfair. And, they also had a really combative stance in Washington, D.C. over the last few years, both with regulators and Congress. And so, we may look back a decade from now and say it didn't have to be this way. They could have a multi-year lawsuit ahead of them. And while they have many deep funds to fight against the FTC, I don't think that's good for anyone who cares about the future of this business.
And so, Dana, as we think about the brands that they are dropping here, this is private label furniture brands, phasing out as well of some of the kind of clothing brands that they have too. When we think about the different markets that they have tried to play, does this set up for any other kind of pullback of other brands that Amazon has as they're facing some of the larger regulatory concerns, and as there had already been within DC, many calls to break up a company as large as Amazon?
Yeah, so they're going from 45 in-house brands with 245,000 products, so a massive business in terms of the number of products, to fewer than 20, and they're getting rid of almost 30 just in clothing. So I think, when I spoke to sellers yesterday, once they read the news, they were relieved because they were, having to compete with Amazon, which is sort of like the house casino. They own the platform, they run the platform, they compete on the platform, they have an edge on the platform. So it really made it hard for these sellers to compete with them. So I think there was a sigh of relief there, but will it be enough to appease regulators? I doubt it.
And so, Jason, I want to ask you about then this battle for consumers' wallets here. As retailers are trying to get really a handle on what consumers want, what they're willing to spend more on, how they're willing to pull back, and sort of brand loyalty as well. When you pit an Amazon, just in the retail space at least, against a Walmart, how are they now positioned?
Yeah, I think it depends on which category you're talking about. So in the grocery category, despite Amazon's acquisition of Whole Foods in 2017, they've struggled mightily. They've paused the expansion of their fresh stores. They've now reinvented a few of them to see if the new model works. But they really have struggled there. And that has allowed Walmart to continue to sort of make up ground in digital when it comes to grocery. They've really sped up this omni-channel transformation under Doug McMillon McMillan, the CEO, over the last few years. And they have a real opening to continue to make things really convenient for customers and perhaps cut a little bit into Amazon's market share. That said, Amazon continues to increase the number of geographies where overnight Prime delivery is available. And that puts a lot more pressure on Walmart to speed up this omni-channel digital transformation that they've been undergoing for years now.
Yeah, it's very interesting, sort of the two companies as foils, if you will, right, for each other. So Dana, when you look at Walmart's pending report here, and what has it also sort of sharpened Amazon to some degree? And I thought it was so fascinating in Amazon's earnings that we did see what seemed like an uptick in demand for e-commerce on that side.
Yeah, I think for a while, Amazon was a little complacent in the fact that it was the fastest e-commerce player in town in terms of shipments. But what you've seen is that Walmart and Target have all gotten faster. And that's part of, to Jason's point, that Amazon has had to roll out these new centers that are one-day delivery, and they're super fast. And they've had to make a big investment there because two-day shipping has become a little bit commoditized. It's not the be-all end-all that it used to be. So they have to stay ahead of everyone else, even if it means lots of investments in supply chain.
And then, Jason, just lastly, while we have you, we think about how all of these players have tried to make sure that they've got some sort of membership program, a tier that Amazon had really kind of, for the retail environment, pioneered and made sure that they see higher ticket or higher purchases or propensity to spend by people who have those subscriptions. Has that played out as intended for some of the other players that we're going to hear from in this retail part of the earnings season?
Yeah, Walmart specifically, they have Walmart Plus. And in my book, I spoke to their former e-commerce chief, Mark Laurie, and he knew and told executives internally, we need to steal some Prime customers away if we're going to make up a lot of ground in the digital world, which in many ways is the future of the retail industry. And so Walmart's, they have a good program now in Walmart Plus. They're rolling out new perks. But when I sat down with Doug McMillan, the CEO, last year, he wanted the press and Wall Street to be very conservative in their expectations of Walmart Plus. I don't know. He just said that's only one thing we're doing. We're doing many new things. That's one. I don't know if that signaled it wasn't going as well as planned, or that they really are investing in advertising and logistics services and fulfillment services, much in the Amazon playbook. But again, I think it's going all right on their front, and they do need to steal some Prime customers if the program is going to be really successful long term.
All right, we will see exactly how that success has played out over the most recent quarter when Walmart does report. That just days away from now, but we have a weekend between now and then. Wall Street reporter Dana Mattioli and tech business journalist and author of Winner Sells All, Amazon, Walmart, and the Ballet for Our Wallets, author Jason Del Rey. Thank you both for joining us here. We appreciate it.